Good morning, everyone, and welcome to Nadex Morning Analysis, where we take a look at some hot spots in the markets today, trying to give you some ideas on where you might want to look for some potential trade setups. My name is Todd Rich. I am with Nadex. With me is my good friend Brian Caprice from Keep Trading Simple. Before Brian and I jump into it, I do need to share our disclaimer that trading involves risk and may not be appropriate for everyone, that any trading decisions you make are solely your responsibility and at your own risk. And please, this is an educational session. Please do not construe anything Brian or I say as a buy or sell recommendation. We are doing this for your education purposes. So I think the story that we wanted to talk about today, at least the main one, is we're seeing this, is the Japanese yen. The yen is weak across the board. So here, Brian, I'm going to let you start teeing up the story, and then we're going to take a look at some charts
Sure.
on the yen.
Yeah, I mean, actually, it's a dollar and slash yen story. You're seeing, but of the two, if you look across the board, the first assessment is, well, wait a second, look at this. The dollar is weak. Euro dollar up, pound dollar up, dollar yen down, dollar Swiss down. So you're seeing it across the board for the most part. But again, the yen is kind of the big main focus in this early session because it tends to go more with the indices. And that's kind of what we're seeing is the indices kind of retracing back a little bit from that really big push yesterday on Monday, which, again, we expect to see that. The other bit of it, too, is we've had that kind of dollar strength start in the week, and then it rolls. So we kind of expected this with the dollar. Unfortunately, a lot move has already happened. So it's kind of one of those things, like we don't want to start chasing it out and say, hey, go dollar short, because a lot of that is written from yesterday till today. And again, you're seeing these 24-hour pip changes move. So, for the most part, right now, it is more of a yen-driven market. It's given us the opportunity. We've seen things like the dollar yen really pull back, right? It's pulled back quite a bit, right? We've seen the Aussie yen go, the Euro yen go, and then the pound yen. One interesting thing I wanted to about the pound yen was a level that we talked about yesterday, and it was a 30-minute. Earlier, or late last week, we got this really, really, really huge push up of, again, emotional response to pound-based data. Now, it's an area that we marked off yesterday between 44.03 and 43.89. Why I like this area, and again, I'm very if this, then that type trader. We've kind of, pushed back down again from kind of the weekend highs, and there was that short trade set up there. But now this is a level that not only have we hit it once and we had a quick pullback, and we hit it again, we've just bounced off of it probably second, if not third time. As you know, with these Harry Potter, these continuation trades, we're always looking for us to break, right? We're not looking to call a top or bottom. We're looking for that top or bottom to actually break. 3, number 4 tends to be the sweet spot. And the next time that we hit this area, again, kind of that 3, number 4 time frame. So could we take one more bounce off of it? Sure, we absolutely could. There's a small level of band down there. But the next time we come through, I'm going to start looking for breaks. And again, is it a tradable thing today? Maybe, maybe not. It really depends on what happens in an hour, 2 hours. But it's absolutely something we got to keep on our radars, because as soon as it breaks that 43.90, we should be looking for the drop, kind of the pull down, then the sideways movement, and then the pull back up again. And this is pretty much on every chart, guys. We're seeing, in some matter or another, some type of a drop, a base, and then a pullback. I can do it this way to confuse people completely. They'll be like, wait, Harry doesn't have that. But, this kind of lightning bolt pattern. It may happen today. It may happen tomorrow. It may happen Thursday. But again, it's one of those trades that if you're an if this, then when this happens, that's when I'm going to be pulling the trigger on it. And again, you don't need to sit here and watch it for the next 3 days or 1 day. Set an alert, look for a break at that level. And again, use your, if you don't have a way to alert yourself, go get yourself an IG demo account, set an alert on there since this is a currency trade, and it'll literally send it on your phone. It can't be any easier than that.
Yeah, no, that's fantastic. Now I'm going to jump over and let's take a look at the same chart on the Nadex platform. And, it helps if I kind of bring the whole chart back into play. There we go. And you can see that large emotional move that we had late last week. That was all a pound story. And it continued to go higher until it didn't. Here's that roughly 144 level that Brian's talking about. And again, here I'm going to draw it in here because I do like people to be able to do this themselves, and you see it. It hit it a couple times back here in this 144 range. Here's the third time, and what you what you're looking for is the little bounce that we're getting right now, and then let's watch as it if it comes back. I'm sorry, if it would come back down, you would be looking for it to break it, and then that's when we would be looking for that setup where the confirmation would come. If it were to come back, hit it, and then try to potentially fill in some of that emotional gap that we had down this way from last week. So again, keep an eye on it. There's these knockouts, great way to play this. Again, defined risk, defined reward. You see something starting to break down. There's probably a way for you to take a limited risk, defined reward, play for a downward move. So keep an eye on the pound yen. And Brian mentioned it was kind of the yen looking weak across the board. Here, let's just
dollar yen, dollar yen as well. That one is a huge push to the downside.
Yeah, I mean, here you can see it's happening again in the Aussie yen. Let's actually just take a look at the dollar yen. So now I got to scroll through and just make sure I find there's the euro yen, which I could bring up, but you wanted to see the USD. There we go. USD yen. Let's take a look here. Let's just drop in. Oh wow, right. I mean, you're really seeing it. Well, and here you're seeing right. This is a double whammy, right?
Strength that we're seeing on all the pairs, and then you're seeing dollar weakness combined with. It's the biggest of the movers, and again, that was that sell level at 105.55 that we brought up yesterday morning that we left.
All right. Let's do one more this morning. I think
sure.
a good thing for us to take a look at, just because it's been doing our setups. Gold is again, it's an interesting trade. It's been giving us some.
Yeah, so I'll start. So I mean, here's the gold chart, and again, it was an area that we were talking about yesterday, that 18.45, and one of the cautionary measures that I mentioned, at least for the second webinar I did yesterday, was we saw some basing. Right, if we saw some bait for this to pop, and it did, it popped about 3/4 of the way. It was at a 2-to-1 risk-to-reward ratio, and that level is still existing there. And the reason why we're probably seeing back right now is because news just came out at 8:30 today from Kaplan. Now, Kaplan is he's not the most powerful of the Fed governors, or like the Fed chiefs or whatever, but he because he's part of the discussions, this is definitely what's going on. And there's some very comments that he's made that he wouldn't be surprised by a temporary rise in inflation. Cyclical elements of inflation may build over time. There's that gold bull story. Then he says we see a strong boost of GDP in 2021, which is interesting because we just got organic stimulus package and didn't use the last one, but yet they already are seeing forces in there that they're seeing a huge growth, right? And it's going to continue into 2020. Then he's saying, it's appropriate to be aggressive with our tools. Okay, that's great. And then once it's weather, we see, healthy, extraordinary, yada, yada. Fed's actions surely have an impact on financial assets. We got it. Watching for excessive risk taking. Don't see any systemic risks. So it kind of goes back to that same story that we're talking about, that the gold hawks were looking for was, all right, we're going to print all this money. Gold should go higher. And we saw that, hey, listen, we're going to push through this $1.9 trillion stimulus package. And the proponents were like, well, we didn't use the last bit of money, but we're going to produce even more now. We don't even know what we're fit. So the inflation guys are over there going, oh, yeah, this looks good. So, again, all these are factors. And again, now that the Fed is talking about inflation, we saw overseas, we saw the U talking about inflation. This is what people, that were interested in trading gold were looking for. And again, a little bit of a position here. And we're seeing a pullback, but most likely this is the profit taking before the retail trader steps in. So, it's an interesting level. As I said, it's an area where, and again, you can see it. Let me use my little cursor here. I forgot you guys can see it. You can see that there's a bunch of little kind of small areas here, a little pressure here, a little pressure here. We've kind of cleared this. So it's not the cleanest of, it's not one of these situations where there's nothing holding it back. It's a battle still to the top side, but because people are mentioning inflation, it's one of those times where you got to kind of look for it. And, we've made 2 attempts. We'll see what the retail trader does on the way in. They're looking for buyers, and there's a level sitting here as well for it. But I think staying kind of bullish focus for gold is really the right way to look at it, and really look for these pullback opportunities to be able to take longs. Because again, we're printing money left and right. You're starting to hear inflation from multiple different countries at this point. All those things are factors that would lead to a bullish gold position.
Yeah. And it's they really here. I'm actually going to shrink this down and back it up. I mean, they really took gold to task, and we're really seeing it. Essentially, you can see the V-shaped recovery where it wants to go back to.
Mm-hmm.
We have that level, that 1870 level up above. That was always an important level. But again, yesterday we talked about it. This 1830 level has always been really, I mean, that's a price. And then we had the 1800 level down below, that emotional level. But we saw first there was the lightning bolt, the retrace. It broke through a level, it retraced, and then it went to the downside. Then on its way back up, it broke back through 1800, retraced, and took off. Here we are now. It made it back up above that 1830 level. I mean, that really was a level that's been rather important. It came through, retraced. We're bouncing off of it. We're getting our little bit. So while some sellers may step in here, it just looks like there are buyers of gold, and I wouldn't be surprised to see it, even if it chops sideways, to continue to drift higher. But we might go back to being range bound. We'll keep an eye on the 1830 level and the 1870 level above it.
Yeah, I mean, tomorrow's an important day at 8:30 tomorrow morning, which will be on before we speak, obviously. CPI month over month, as well as the core CPI. So, the consumer price index is really the first kind of true steps of seeing inflation into the markets. CPI is expected to be a little bit down last time. Core is supposed to also go up. So again, both of them are showing kind of positive inflation, as well as Powell speaks tomorrow. The Fed Chair Powell speaks. You guys can see it down here. Whenever he speaks, he's the guy that's responsible for inflation and kind of the growth of the economy. A lot of people think it's the president's job to grow the economy. It's not. It's his job to lead the country. The Federal Reserve, it's their job. They're the ones focusing on inflation and GDP growth. As Todd mentions all the time, the economy is different than the markets. This is the guy that's responsible for it, as well as we have a budget that's expected to come in as, again, not basically increasing our deficit. More higher spending is coming out tomorrow. So, it's one of these things, again, bigger budget, more money spending. And again, Powell has the power to crazy things inside of the market tomorrow, but, he'll be talking about and definitely talking about that CPI number. So
so keep an eye, and that's actually something to be looking forward to tomorrow. And as a reminder, inflation's it's not a bad thing. In fact, we could actually use some.
Yeah, 2% is considered healthy, and that's where kind of the mandate is for that. We have to have 2%. So they'll do whatever they're in their power to do that. And remember, to curb inflation is when they raise interest rates, and they've already said we're probably not raising them till 23 at the earliest.
Right.
So 2 years are running hot.
It just tells you we're still trying to get out of this recession. All right, now with that, we're going to be back in 2 hours and 45 minutes.
Yep.
Noon Eastern. If you're not registered for it, go to the Nadex website. A full-blown analysis of all the markets. So come back, join, and it'll be setups for the entire week. But then again, Brian and I will always be here also every morning. 9 a.m. Eastern, real quickly for these sessions for each day, because different things come out every evening, and we want to just kind of look for some hot spots. With that, any questions for Nadex, please email us, customerservice@nadex.com. If you're looking, if you'd like to chat with Brian, you can email him. He is very accessible. Email him, support@keeptradingsimple.com. I know that Brian does interact with quite a few of you folks, and I know he really welcomes those interactions. So please, got any questions for him, go ahead and email him, support@keeptradingsimple.com. With that, please go sign up at the website for the 2 hours and 45 minutes for the full-blown session for the week. We'll dive into all of the markets, commodities, indices, all the foreign exchange pairs, and then we'll be back tomorrow morning for our morning analysis. With that, want to wish everyone good luck in the markets.